Are we live? Hey, there we go. What's up, winners? Welcome to Stay Winning Wealth. Thank you for tuning in. Appreciate the support. So we have a big week. Let's see here. Are we live yet? Can you guys see me? At the stage? There we go. Perfect. All right, we had a tremendous week of big U.S. economy, big financial news from the stock market to real estate, even crypto. So I'm going to go over all that information here with you guys. Okay. So thank you for tuning in. Appreciate you. So we're going to start with the Dow, right? Hit the record three-peat. So 3 days in a row this week over 50K. All right. So amazing. So the Dow this week clocked in the third straight record close over 50,000. All right. So that's one big positive for the U.S. economy. And actually, let me share my screen here with you guys so you can see. I actually provide breaking news regarding real estate, finance, business, crypto, anything to help you build financial wealth through my newsletter. And that's what I'm using here as a reference to provide the information regarding U.S. economy news today. So this is a new streaming software. So let me go take a look and see if I can share my screen here. Share screen. Let me see what screen it's going to share. I can just share the entire screen because why not? Why not? All right. Thank you for the support. So now let's go ahead and put the screen up. Actually, for clipping purposes, I kind of like the one where I'm at the bottom. Let me know what you guys think. Right? For clipping purposes, like that one makes a lot of sense. Okay, so if you're not subscribed to my newsletter, I'll leave the link down below. But again, thank you for tuning in. Let's take a look. Wait, that's right. There's a chat here. Where is that chat? Is anyone tuned in yet? Connect chat. Okay, that's fine. Evergreen content. Thank you for the support. Don't forget to hit the like and subscribe if you're new here. All right, guys. So my newsletter, Stay Winning Wealth, everything's the same name. I provided the breaking news earlier this week that the Dow hits a record three-peat. As I mentioned, it broke 50,000. All right, for the first time ever, and for 3 days in a row. Okay, so it was not an accident. All right, so the Dow just clocked its third straight record close, quietly stacking wins while everyone's doom scrolling about tech crashes and crypto meltdowns. Give me a moment here. One moment. All right, and we're back. I'm at work, guys, so that's why I had to step away for like a few seconds. But hit the like, subscribe. Thank you for the support. I'm taking all the risk here for you just to provide you this accurate and true information for better financial health for you. Mortgage rates. Mortgage rates went ahead and dropped. Some people are reporting 5.5%. Right. So for the first time since 2022, rates are in the 5%, you guys. So sub 6% is already here. And if you got Storm Credit and you're shopping for the right lenders, you're already seeing sub 6% vibes. Right. So Navy Federal Credit Union, Citibank, they got promos at 5.5%. And obviously it's all depending on approved credit and if your credit is good. Right. So 5% is a magic number. Why is that the case? In the 5.5% range or just 5%, you have potentially a lot of people that are willing to let go of their current 4% and sub mortgages to be able to sell or move out or downgrade or upgrade. Also, you have people that will go ahead and not sit on the sidelines anymore. They were priced out, right? But if mortgage rates go back down to 5%, 5.5%, it brings about 4 million new people, potential buyers, into the market that were purely priced out at 6.5%. So 5% is a magic number because it unlocks inventory. All right. So when rates get close enough to 5%, a ton of homeowners finally start feeling trapped, or they're old 3% mortgages, and they list. So more listings means more options. All right. So again, if you want to get this breaking news information, just subscribe to my newsletter. I'll put the subscription down below. All right. This week, we also got the jobs report. Okay. So jobless claims, they cooled off, right? So the labor market isn't quitting. So claims dropped 5,000 all the way to 227 for the week ending February 7th. Okay. So last week was a spike. A lot of people would be like, oh, maybe it was just, the climate, which makes sense. The weather is always a big factor. Okay. But let me go over the second part of the report, right? So jobless claims dropped. And then the January jobs report added 130,000 jobs. And unemployment went down to 4.3%. That's huge, you guys. That's amazing, right? So January added 130,000 jobs. That's double what we saw in December, and it beat economists' expectations of around 70,000. That's huge. That's very, very huge. All right. So most of the jobs were in the healthcare industry, construction, because we are building more homes. They're cutting back regulations. Remember, if you've been following me on social media, I've been keeping up with all the announcements Trump has been making about housing affordability. Okay, so construction added 33,000 jobs. Professional and business services contributed 34,000 jobs. So this includes consulting, IT services, corporate support. All right, social assistance added 41,600 jobs. So think about childcare, elderly care. I know that's been a huge topic, right? Childcare in the recent weeks. All right, we have less government jobs. Okay, so the government jobs are shrinking. This is probably the first time this flips, where we see more construction jobs, social assistance jobs versus government jobs. Okay, and again, follow my newsletter to keep up with this. I provide in real-time breaking news. And the biggest win of this week financially for the U.S. economy and for us is that inflation is cooling. All right, I'm going to send out this newsletter later, so don't forget to subscribe. Again, hit the link down below. All right, it's completely free, and it's for. Let me actually show you how that looks like. All right, so you click on the link below. It's going to take you here. Right, the Wealth Playbook, the 1% will tell you the blueprint to master your wealth mindset and markets. So just put your email, subscribe. Anyone that comments below that they subscribed, I'm going to send them a free gift. So let me know what you think. You'll be the first ones to receive that free gift. Okay, I would love to know your thoughts. Leave in the comment below that you subscribed. Again, the link, I'll put it in the description, but it's staywinningusd.bhack.com. All right, so let's go over the inflation data that just dropped today as of 8:30 a.m. Eastern time. All right, so the market just got the news they've been waiting for. January CPI report came in cooler than expected. Let's see if we can make this bigger. Actually, maybe smaller for clipping purposes. Kinda, right? We'll fix the clipping later. Okay, so January's Consumer Price Index, CPI, showed inflation cooling more than the economists had predicted. So core CPI, right, which trips out volatile food and energy prices, came in softer too. So this is the kind of data that makes the Federal Reserve smile. All right. So the markets obviously responded immediately. S&P, the NASDAQ, they both rallied, and Dow followed suit. And why is that? Because cooler inflation means less pressure on the Fed to keep rates high. Less pressure means potential rate cuts. Rate cuts mean cheaper borrowing costs for business and consumers. And that's what I mentioned at the beginning of the stream, guys. 5% being the magic number, 5.5% for most Americans. So just wanted to bring you all the financial news, economy news of this week. All right. I am going to mention crypto here a little bit. All right. Some of the winners, some of the losers in the market. Okay. So make sure you subscribe to the newsletter. And that way you guys can stay up to date with the latest information. And this is what the page looks like here. All right, winners, let me know in the comments if you went ahead and subscribed to the newsletter. Let me know what you think of this, anything I missed, or any questions below, or what this means for your wallet and your money. But again, if you're new here, don't forget to hit the like, don't forget to subscribe. Thank you for the support, and don't forget to subscribe to the free newsletter. All right, winners, stay winning. Thank you for tuning in.